I have a question for you. When you wake up in the morning, would you prefer to go into a job either physically or virtually on Zoom, work for a company, work for a boss, and make the man rich? Or would you rather live your best life and do whatever you'd like with your day, earning passive income from dividend-paying stocks that can pay for all of your bills? I know personally speaking, the dividend-paying stock route is much more attractive to me, although I realize and I respect the importance of having a job in the process of getting from here to here, getting to that financial independence. I want to share in the video today 5 stocks that I would buy if I were starting over right now in November of 2021. If I were investing $10,000 right now in November of 2021, how would I start over? I've been investing in dividend-paying stocks for over 20 years very successfully, but I want to take a step back and go through a thought exercise today, how it's possible to still get started right now in 2021 and build a very successful dividend stock portfolio. And in fact, with the 5 stocks that I'm going to share in the video today, I think it's possible to basically triple the size of the portfolio after just 10 years. After 20 years, I think it's possible to almost 7x the size of the portfolio. After just 10 years, I think it would be possible to yield almost 7% yield on cost and 12% on cost after 20 years. And this is after the stock market has increased in value so much in one of the longest bull markets of history. Get ready, everyone. I have a really special dividend investing video for all of you today. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So get ready. This is going to be a really exciting video. I want to share on the screen right now the 5 stocks. And so I'm going to go through some Excel analysis that I prepared for all of you today. The 5 stocks are Johnson & Johnson, CLOROX Company, KIMBERLY-CLARK, Apple, and Bitcoin. Now, Bitcoin technically is not a stock. It is a financial asset. And so these are the 5 stocks that I would hypothetically buy right now if I were starting over with $10,000 in 2021. And I want to illustrate one by one why these stocks are so important. First and foremost, Johnson & Johnson. Johnson & Johnson, in my opinion, is a proxy for the overall S&P 500 index. I think in general, this is a company that will keep pace with the index over time, but it will provide a higher component of cash flow to investors versus the index. And in my opinion, it will provide less maximum drawdown during market corrections. It's overall a less risky stock, in my opinion, than the greater index. This is a healthcare company that spans consumer products, medical devices, and pharmaceuticals. It's broadly diversified. It's a very stable company, and they have been increasing their dividend on an annual basis forever. As you can see on the screen in front of you right now, the starting dividend yield of 2.6% is not super exciting on its own, but what is so exciting is on average per year they increase that dividend by 5.8%. And with a payout ratio of 43%, there's a lot of room to continue to grow that dividend, even if the business growth slows down. With a market capitalization of $428.6 billion, it's a really huge and robust company. But with so many companies these days having market capitalizations in the trillions, I certainly believe that Johnson & Johnson has a lot of growth ahead of it and a lot of opportunity to emerge as a multi-trillion-dollar company in the decades to come. Now, worth noting, this is a video about investing, and so I'm a long-term investor with a very long-term time horizon. All right, everyone, I want to keep going. The next stock that I want to share with all of you today is the CLOROX company. Now, CLOROX is a little bit different than Johnson & Johnson. I was looking at Johnson & Johnson. Overall, as a stock that provides some value with a starting PE ratio in the 16s, but also some growth, some stability. If you will, it's a world-class dividend stock. It's one of those dividend stocks that most members of any average kind of dividend investing community tend to own. Now, what I would say about Johnson & Johnson, quite frankly, is if I just had to put my $10,000 into one stock, it would all go to Johnson & Johnson. Now, with CLOROX, by contrast, this is a consumer packaged goods company. They make all kinds of consumer products such as bleach, such as Glad bags, such as even charcoal for barbecuing. And so there's all kinds of consumer products. They own the Burt's Bees brand of products as well. This is a smaller company by market capitalization, and so it's growing a little bit quicker than many of the other companies out there. They have limited exposure internationally, and so there's a ton of room for them to grow internationally. Now, what I like about CLOROX right now is not only is it a dividend growth company, but I look at it a little bit as a contrarian value play in many ways, because the stock has tanked in the last year as the overall society has recovered from the pandemic, and consumers are not stockpiling those Clorox wipes quite as much as they were during the pandemic. As you can see on the screen right now with Clorox, it does have a PE ratio that's quite a bit higher than Johnson & Johnson. It's in that 26 range this year, 24 next year. But keep in mind that earnings right now are suppressed a little bit. This is a tough year for Clorox, and so I think the PE ratio is a bit misleading. With a starting dividend yield of 2.84%, it typically does not trade at a starting dividend yield quite that high. Now, with a 5-year compound annual growth rate on that dividend, they are growing the dividend on average by 7.7% per year. Payout ratio is a little bit higher, but I think the earnings per share are a little misleading right now because it's a rough year for the company. Market cap is a really minuscule $19.7 billion. And so I'm looking to this company to provide growth and value in the portfolio, and also diversification, because we've gone from the healthcare space to the consumer packaged goods space in a diversified manner. The next one I want to share is another contrarian pick. I would say out of the 5 stocks today, this one I look at as a value stock. And so Kimberly-Clark is the next one. Kimberly-Clark makes toilet paper and paper products. This is a company that did really well during the pandemic, but like Clorox, now that the pandemic is over and consumers have already stockpiled so many rolls of toilet paper, their spending habits are slowing down a little bit right now. But I look at this as an opportunity to buy when the stock is going down. And so one of the things you'll see about the portfolio today is I have Johnson & Johnson, which is up and to the right. It's trending upwards. It's performing really well. But Clorox and Kimberly-Clark, they fall a little bit more into kind of a correction category. And as a long-term dividend investor, picking stocks right now in November of 2021, I like to pick the stocks that are on sale. And so as you can see on the screen in front of you right now, Kimberly-Clark, I look at it more as a value. Now, the PE ratio, it is a bit higher, 20 this year, 18.88 next year. But again, what I would say is this company's PE ratio is a little misleading because earnings per share is suppressed this year. This is a recovery year after everyone went crazy buying so much toilet paper last year. Now, the dividend yield starting is a 3.5%, which is a strong, aggressive dividend yield in this current market where most stocks are bid up to really high levels. The dividend, though, is growing a little bit slower at 4.4%, so this will give the investor a lot of cash flow right away, but the cash flow growth will be a little bit slower, and the market cap is $43.8 billion. So there's a lot of room for this company over time to grow, just like Clorox. And so the next one that I include on the list, the portfolio holistically today, what's the purpose of this portfolio? It's capital appreciation. It's overall cash flow. It's overall value. It's kind of looking forward, but also looking present. It's going to provide a nice amount of cash flow right now in 2021, but going forward, it's going to keep up with the index, in my humble opinion. It's going to grow. It's going to provide that capital appreciation, but most importantly, the cash flow growth. And so I cannot have a long-term growth-oriented portfolio without Apple. And I personally think that Apple right now is trading at reasonably attractive levels, even though the stock has been trending up, just because earnings are skyrocketing and growing so quickly. And what I would say about Apple is it provides a diversified approach and exposure to technology, to hardware such as the iPhone and such as the laptops, the MacBooks that they provide. It provides exposure just to the brand. I was reading yesterday that their little cleaning cloth retails for $19 or something, and it's sold out all over the place. So it's just an incomparable brand. They make their own microprocessors, and so this gives exposure to the chip market. It also gives exposure just to internet services through iTunes, for example, where consumers are making all kinds of purchases. It's a diversified branding and technology play. Now, as you can see on the screen in front of you right now with Apple, what I would say is this satisfies the growth role within the portfolio, whereas Kimberly-Clark was value. First two were growth and value. And right now, the PE on Apple is not too bad. Given its growth rate, this is a company that's growing quickly. The PE is only a 26, and so that's not too bad. Now, the starting yield is only 0.59%, but they're growing that really quickly by 9.1% on average per year, with a payout ratio of only 16% too. I think over time, that dividend yield will surely grow. Now, as a company with a $2.5 trillion market cap, this is a huge mega company, and I believe we live in a society right now where it really is winner takes all. And so if I were starting over hypothetically with 10,000 and are building my portfolio, I would want to pick some of these bigger companies that have staying power because we are in a winner takes all society. Now, the last asset I want to discuss today is Bitcoin. And so this one may be a little bit more controversial on a dividend investing channel, but the reason I love Bitcoin so much is it is an asset that is really disrupting the entire financial services landscape. And what's so exciting about Bitcoin is it's only trading right now for a market capitalization about half of Apple's. And so it's less than half the value of Apple, but we're not even talking about a company here. We're talking about a currency and a financial platform that is going to grow by leaps and bounds, or continue to in future years. And what has happened is Bitcoin has matured, the landscape has matured, it has reached a market cap of size. It is possible now to earn interest on Bitcoin. And with a platform like Voyager, for example, which is a platform that I use, I will link to Voyager, by the way, in the pinned comment below if you want to sign up. In fact, if you sign up with my affiliate link, you will, and you deposit $100 and trade that into a crypto asset like Bitcoin, you're going to receive $25 in free Bitcoin. I will as well, and I'll be forever grateful. I love Voyager, and in fact, I will share later in the video today some screenshots from my personal account. Today is the 1st of November, so I just received all kinds of interest on US dollar coin, Bitcoin, and other coins that I own in Voyager. But what's so exciting with Voyager is it's possible to earn 5.75% interest on Bitcoin. And Voyager is not the only app. There are many other apps and platforms that allow the same. And so as you can see on the screen in front of you right now, this is a non-traditional asset. And so a lot of these columns are NA because there's no concept of PE ratio, but there is a concept of dividend. And the dividend is huge. It is about 5.75% starting yield. And now dividends work really differently on Bitcoin. Over time, I don't anticipate like a dividend increase or anything like that. In fact, I think starting yields will go down over time as the landscape matures, and I think more players are in the landscape. Yields won't have to be so high, but I think the value of Bitcoin will keep growing. And so as the price of Bitcoin goes up, even though the dividend yields may be a little bit lower on Bitcoin, the overall net cash flow will grow by leaps and bounds. And I'm going to show that in the analysis today. And so these are the 5 assets that I personally would buy if I were starting out with $10,000. And in terms of full disclosure, by the way, I am a Voyager affiliate. And so I want to do a little analysis next that shows what could happen over time with these assets. Before I do that, though, by the way, I want to share with all of my subscribers here that I have a brand new Patreon right now. Well, a brand new strategy that is on Patreon. I've been on Patreon for a while. I just crossed the milestone of 50 videos, 50 bonus videos on Patreon. And many of you know over the years I've been sharing some of my stock trades or a lot of my stock trades on Twitter and Facebook. I'm not doing that anymore. What I've decided is I want to share my stock trades exclusively on Patreon, and I want to do that and accompany it with just a lot of information, a blog post, if you will. I want to give more detail than is possible on Facebook and Twitter, and so that's what I'm doing right now. And so if you want to sign up on Patreon, it's only $3 a month for that first tier where I share all of my stock trades. And also that will instantly unlock all 50 bonus videos that I have on Patreon. And I have a $10 tier as well. And on the $10 tier, not only do you get everything that's available in the $3 tier, but you also get all of my bonus videos that I post regularly going forward. So starting with bonus video 51, that will be in the $10 tier. And I'll have a bunch of other bonus perks in that $10 tier as well. I plan to include some cryptocurrency content in that tier as well. And so I called the $3 tier the backyard tier because that's where I got started out with my dividend investing channel. If you've been here since the early days, the $10 tier, I call it the corner because many of you remember I used to do my videos in that little corner. Now I'm in the garage, so I may include a higher tier yet in the future, the garage tier. But for now, I just have those two. And so check out Patreon. I'll link to it in the pinned comment below if you want to check that out. And also, before we continue, if you want to live off of dividends one day or have dividends pay for a lot of your living expenses, go ahead and smash that like button. It means the world to me. It really helps me with what I'm doing here. Also, don't forget to subscribe. I have over 300 videos here on YouTube about dividend investing, and I'm on my way to 400 videos right now. And so I have many more on the way. All right, I want to get into some projections. Let's look at the first 10 years first. So check it out on the screen right now. And so what I did for my projections are a little different than what I've done in the past. I have all 5 stocks that I just mentioned. Now, what I did is I invested equally in all of them, $2,000 in each for $10,000 total. And I look at how many shares I get. I look at how much dividends I get right away. It's $305 a year right away. That's awesome. Now, keep in mind, not all dividends are equal. The first 4 companies pay qualified dividends, which are taxed in the United States as long-term capital gains. Bitcoin, it would be looked at more as ordinary income. It's an interest payment, and so it's taxed differently at a higher rate. Keep that in mind. Now, what I did in terms of projecting where all of this could be in 10 years is I look at total returns with dividends reinvested. I just say, hypothetically, over the next 10 years, per year on average, what will each of these assets grow if I reinvest all the dividends? And I look at J&J growing about 7.5% per year, CLOROX 8%, Kimberly 6.5%, Apple about 12% per year on average, Bitcoin up at 20%. So this is an asset which I think has a lot more growth ahead of it. And then I just look at a 10 years out share price, and I'm factoring in dividends reinvested, capital appreciation. It's not really the real share price because it has that dividend reinvestment component, but to make things simple, my percentages here kind of factor in dividend reinvestment. And so anyway, that's what you get there. And then I look 10 years out, what do I think the yield will be? I think J&J will be similar to what it is now, the starting yield that is. CLOROX similar, Kimberly similar. Apple, I think it'll be up a little bit higher, maybe about 1%. And I think Bitcoin will be lower. I actually think as the landscape matures, that yield will probably be more like 2%, which will still be a lot better than a traditional bank account. Now, I do think my modeling is somewhat conservative, but what I would say is 10 years out, what does the value become on all of these assets? Well, or all of these investments? Well, you have the asset value on that 10-year share price, again, with dividends reinvested, so it's a little bit inflated to account for the dividends, and because I peg the shares as being the same. And what would the monetary value of the portfolio be? Well, you see Johnson & Johnson, it's a double. CLOROX, it's a double. Kimberly, it's less than a double, but it's pretty nice. Apple, it's a triple. And so Bitcoin, it's, wow, way the heck through the roof. It's going way up 6 times. And so in total, I get a $30,789 portfolio value, and so a 3x after 10 years. And I look at the cash flow as well. I look on, hey, with these starting yields, given the value of these investments after 10 years, what kind of cash flow would I receive? Well, I've got about $671 per year, which is a 6.7% yield on cost on the original money invested. But we all know as dividend investors that it's not really about 10 years. It's really about multi-decade. We also all know it's not just about $10,000. It's about starting with the 10,000 or maybe even starting with less, but adding brick by brick over time. And so certainly these results could be greatly amplified with a more consistent approach and with more decades invested. And with just that, I want to share on the screen right now a 20-year analysis. And so my 20-year analysis starts with the 10-year values, but what I do is I slow down the kind of total returns there that include dividends reinvested and capital appreciation. J&J, I knock it down 1 percentage point to 6.5%. CLOROX for the next 10 years down from 8% to 7%. Kimberly down from 6.5 to 4. I think it'll flatten out. Apple's down from 12 to 9. Bitcoin's down from 20% per average on year to 10. Again, what I'm exhibiting here is the annual total returns estimate that I have, not for the first 10 years. That's already done with. This is looking years 11 through 20. And so basically the 20-year out all-inclusive share price that factors in capital appreciation and dividends reinvested, I've got there as well. I look at my 20 years out yield. I think J&J's starting yield will be pretty similar to what it is now. CLOROX similar, Kimberly similar. I think Apple will probably be around 1%. I think Bitcoin might dip even lower to about 1.5%, which still beats a very traditional bank account. And so, long story short, what would be the value of these assets, assuming full dividend reinvestment after 20 years? I get about 68.6 thousand, or nearly a 7x on the original investment. And I get cash flow of $12.65 per year, which is about 12.7% on the original investment. And so you can see here the power of dividend stock investing over time. And I think that these estimates here may be a little conservative, quite frankly. And so some of these investments like Apple and Bitcoin may outpace what we're seeing here. J&J may outpace it. Kimberly may underpace it, but it's a team. It's a well-rounded portfolio. And so I have a few notes I want to share. As you can see in front of you right now, what I want to show is this is a cash flow oriented portfolio, but it has a good mix of value growth and stability. It's a forward looking portfolio for the long-term cash flow investor. I think long-term is what it is all about with any type of investing. It was difficult to pick just 5 positions. There are many more stocks I wanted to include, like AbbVie, Altria, PepsiCo, McDonald's, 3M, so on and so forth. I think this is a good exercise because it really helped me prioritize. Now, what I would say is if I had to remove one company, it'd probably be Kimberly-Clark. And so if I really thought at the end of the day, maybe, hey, I want Pepsi instead of it, or I want AbbVie instead of it, McDonald's instead of it, Kimberly would be the company that goes. Now, before I leave today, I wanted to show you my Voyager account really quickly. Check it out on the screen in front of you right now. For those that don't know, Voyager is a cryptocurrency app that makes crypto accessible to the everyday investor like you and me. I like Voyager because it makes cryptocurrency a form of passive income. It adds that passive income stream to a crypto strategy. And so my main strategy in Voyager is owning Bitcoin and owning US dollar coin. US dollar coin is pegged to the US dollar. It earns a really hefty interest rate. Bitcoin earns 5.75. I actually get a booster of 0.5% on top of that, but I don't need to get into those details today. If you want to learn more about Voyager, I'll link in the pinned comment and the description below to my cryptocurrency channel where I talk about Voyager all the time. But what I want to share on the screen in front of you right now, because it's the 1st of November, is you can see my interest payments hitting my Voyager app just today. And so the crypto interest is paid on a monthly basis, but it's quoted as APY, annual percentage yield. And so it's a dependable source of passive income each and every month. And again, in terms of full disclosure, I am a Voyager affiliate. And if you want to sign up for Voyager and get your $25 of free Bitcoin, please do check out that pinned comment below. So I want to open up the floor now. If any of you at home want to know or want to share your theories on how to hypothetically invest your first $10,000 in dividend stocks, please include it in the comments section below. I would love to hear your thoughts and let me know what you think about the portfolio shared today. Now, the Excel spreadsheet today, I share these Excel spreadsheets on Patreon. This is one of the perks for the $10, the corner club over there on Patreon. And so if you're a $10 patron, I'll have this spreadsheet uploaded for you there. And so everyone, I really appreciate all of the support here. Don't forget to smash that like button before the end of the video today. And in terms of a full disclosure, I do own the stocks and assets mentioned today. I am long Bitcoin, ticker BTC, US dollar coin, USDC. I am long Johnson & Johnson, J&J. I am long CLOROX, CLX, Kimberly-Clark, KMB, Apple, AAPL. I am also long AbbVie, ABBV, Altria, MO, PepsiCo, PEP. I am long McDonald's, MCD, and 3M, MMM. Those stocks and assets I own in my personal dividend stock portfolio. In terms of full disclosure, I am an affiliate of Voyager. In terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. I'm just sharing my personal journey here on YouTube for fun and entertainment. If you want to invest in stocks or crypto, please consult your personal financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose a ton of money in the stock market and in the crypto market. All right, everyone. I love you all. I hope you enjoyed the video. I'll see you in the comments below, and I'll see you in the next dividend investing video.
Oh.